It's no secret restaurants are facing headwinds from nearly all sides between supply chain snarls, labor shortages, and inflation. But some are better positioned to deal with them than others. Kate Rogers joins us now with the names. Kate?
Hey there, Kelly. Well, overall menu prices are up nearly 5% in the last year as restaurant commodity prices soar, with beef up nearly 60% and fats and oils up 50%. But Chipotle says it's well positioned to handle rising costs and is flexing pricing power with the ability to protect margins moving ahead.
We believe we still have plenty of pricing power to use at our discretion. And, we'll use it when we need to, but obviously we'd prefer to really keep our value proposition as strong as possible.
Now, McDonald's said it increased prices around 6% and saw no consumer pullback in the most recent quarter. Shake Shack also said inflation in both commodity prices and labor are pressuring the company's margins, but executives think they also have additional room to run. This sentiment was echoed by Yum Brands as well. Meanwhile, Brinker International saw pressures from both labor and commodity costs eat into its margins, as did fellow casual named Denny's, whose exec said margins were volatile and it would be several quarters before staffing challenges were eased. Now, if you take a look at stock performance, those with pricing power also happen to be some of the best performers for the year, with Chipotle, McDonald's, and Yum Brands all up double digits. Meanwhile, Brinker is the biggest laggard in the sector, and Denny's is up just fractionally. Kelly, back over to you.
Kate, some people were telling me the other day there was like a country song about Applebee's they thought was driving its relative outperformance to Chili's.
That is so funny. I know all of those viral things do impact sales in some cases. Remember the Beyonce Red Lobster thing a few years ago as well. But I think it's just interesting with the pricing power thing that we're talking about here. Casual is more associated with a sit-down experience, whereas some of the fast food and QSR names are kind of grab and go. So definitely two different offerings there, and consumers tend to be gravitating towards the ones, that are a quicker experience, perhaps a little better priced.
And just as we had ventured out to this one Italian spot in town thinking this is so cute and we can't wait to go here all the time, it closed after 20-some years in business, and it just felt like such a sign of the time. So unfortunate.
Yeah.
Kate, thanks so much. We appreciate it. Kate Rogers on the Restaurant Beat today.